IndusInd Bank reported healthy set of earnings for the first quarter, and they reported merged numbers incorporating Bharat Financial numbers as well. So the key highlights for them were the first one was the net interest margin, which came in at about 4.05%. So this was a key highlight because now they're in the same league as that of an HDFC Bank, which reports margins of 4% plus. So for them, this was a key highlight for the quarter. The second important highlight was the vehicle loan disbursement, which was at a multi-quarter low. So this is because of the auto slowdown that we've been witnessing. But despite that, the management highlighted that they don't have any issues with regards to the asset quality in this particular book. Overall loan growth also slowed down to about 28%, which was at least a 5-quarter low. The next is the asset quality, which remains stable on a headline basis, with gross NPAs coming in at about 2.15%. And if we go within the breakup of the asset quality, the fresh slippages number, that was just to the tune of about 725 crore rupees versus 3688 crores. So this massive decline was on account of the fact that in Q4 of FY19 they recognized IL&FS as an NPA, and even with regards to the stressed some of the stressed groups exposure, including a housing finance company, a media company and a diversified group, there also the exposure came down substantially to about 1.67% versus 1.9% on a sequential basis. And lastly, because of the less stress seen in the asset quality, the provisioning was low at about 430 crore rupees versus 1560 on a sequential basis. But despite that, the provisioning coverage ratio was low at about 43%. So because of the low provisioning, obviously the provisioning coverage ratio didn't move up substantially. So this remains a concern because an ideal percentage for a bank is about 70%. But overall, the numbers looked healthy for IndusInd Bank for the first quarter.